we would still do what's close to our heart. We still work for our families of Sri Lanka and where any market we operate in. We'll make sure that we make their lives better by our goods and services. And we won't know what's going to be new normal. Uncertainty is going to be the normal. And once you make up your mind about that, you're kind of operating in that normal environment. And I guess we'll go forward. We saw a spike last year. If you see the numbers of all FMCG companies, whether it's food or personal care, you find it, they had a good quarter, couple of quarters. 2003, they decided they would benefit by coming to the capital market. And when we IPO'd, the objective was to raise capital to grow. But it was more importantly to transition into a more professional, governance-oriented, structured, where we are forced to create value. I think, even though I'm part of Hemas, I admire the journey and the amount we are corporatized and we became professionals within the system. I guess it's it. And listing was a big part of it.
Welcome to another edition of Stock Pulse. This is a video series produced by the Colombo Stock Exchange, where we interview leaders of leading companies that are listed on the stock exchange to help you to better understand the potential of the companies that you want to invest in. From the perspective of the company, we provide them an opportunity to reach out to investors and shareholders using our social media platforms. Today, we have with us the Group Chief Executive Officer of Hemas Holdings PLC, Kasturi Chellaraja Wilson. Welcome, Kasturi, to Stock Pulse, and thank you for taking the time to be with us today. Let's start with the COVID-19 pandemic, something that is still very much in our midst. I'm sure as a group, your companies have undergone many challenges over the years. How does the COVID-19 pandemic compare with some of the challenges you may have faced over the years?
So thank you, Rajiv. It's a pleasure being here. So as you know, Hemas is a 70-year-old company, and by that default, we've seen many challenges. And most recently, pre-COVID, we faced a challenge of Easter Sunday attack. And in that, we were impacted with being branded as a Muslim company, whereas we felt that we were subject to it, isolated to the rest of the economy and the businesses. So that really, we were not prepared for it because employees didn't see ourselves that way. And we had to really dig deep and come out. We went out guns blazing. We had to figure out how we can convince people who we were, convince consumers our products value is still there, and recapture what we've lost and be stronger by that. So at the end of it, towards the end, pre-COVID, we were bolder because we've gone through things alone, felt that nobody was there to support us. We had regained some of the market shares we've lost. We were seeing steady quarter-on-quarter volume growth, and we were in a good place. And then COVID comes in. So COVID was like no other challenge. The whole world was impacted in different impact sizes or impact full ways, and different times. But irrespective of it, we didn't know what hit us. When the initial lockdown happened, there was confusion of what does this mean? Confusion for your health. There was fear for your health, fear for economy, fear with society, whether you integrate or not, and that stigma. So what happened for us is that the difference here is we had gone through just coming out of one challenge. We just had to understand this was not unique for us, this was for everybody. And being in businesses with in essential and near essential, the same teams had to think differently again. So getting out there, serving our consumer, making sure that we live to our purpose. So during the first crisis of Easter Sunday, we had to step back and ask who we were. And we realized our purpose. So that helped us to even navigate COVID, our purpose being to impact the families healthfully. And so we went about that, but we had to change the way we operate. We had to change the models we used. The way the people were brought in batches, the shift bases changed, working hours changed, the levels of decision making and the authority matrix changed overnight. I mean, we can't sit here and make decisions for others, and grassroots level had to make, the people at the feet on the street had to make the decisions. But since we had been through crisis, this was kind of easier to navigate, and we were committed to going through that. But the biggest impact I see is the economic toll from COVID will be deep and long lasting. That is not the same as what we felt any other challenge before. It will be deep and long lasting as a nation, as communities, because we still see that while some businesses are resilient, we have some businesses, families who have been impacted and would have lasting impacts for some time. So that's the biggest thing. But what Hemas, we being led by our purpose, we would still do what's close to our heart. We still work for our families of Sri Lanka and where any market we operate in. We'll make sure that we make their lives better by our goods and services. And we won't know what's going to be new normal. Uncertainty is going to be the normal. Yeah. And once you make up your mind about that, you're kind of operating in that normal environment. And I guess we'll go forward.
So that's a very useful insight. And you spoke about near normal. What are you hearing from, if you look at the CEOs of your companies, the leaders of the different business units, from your stakeholders, from your customers? What are you hearing from them in a possible post-COVID recovery and a normalcy? How would you see a post-COVID new normal?
Yeah, so we are consumer brands, healthcare with strategic interest in logistics here, and consumer brands. We have the consumer care, the home care, and the education brand there. In healthcare, of course, we are in the whole vertical of healthcare, from pharmaceutical imports to manufacturing, distribution, right across the chain, including B2C, and the hospitals. And logistics, from maritime to aviation to the logistics distribution is there. Now, in this, our challenges vary from industry to the industry. But what we hear uniform across all businesses is that this is not only dependent on the Sri Lankan economy. Anything which is happening in the world also is impacting us. Yeah. So sometimes the supply chain gets disrupted because some sourcing market is not there, and now supply chain and costs are getting impacted, because not only that our rupee is under pressure, but also that global raw material across global indexes have gone up. Then if you leave that aside, you come locally, you have consumers whose disposable incomes are impacted. Yeah. We saw a spike last year. If you see the numbers of all FMCG companies, whether it's food or personal care, you find it they had a good couple of quarters, and you see a slowdown. The reason being, my gut is that people eliminated discretionary expenses during lockdown, during uncertainties. They went through necessity, they spent on necessary stuff, but they didn't have expenses on school, on van, and traveling, and some of the healthcare, because people by being safe, you actually were healthier, right? Yeah. And because of that, I guess you did spend on. You see that they were spending on certain stuff which they normally wouldn't, because they had money. Now that things are in the uncertain times, we're still getting into a new normal. Yes. This would be there. We would be there. This kind of a bit of a reduction in spending is being seen. Of course, it will also pivot a lot around the next Maha season as well, to see how that agri sector performs next. And in that context, what we see, our businesses say that consumer patterns, consumption patterns, their needs seem to be changing. aspirations are shifting. So we as businesses should be out there trying to understand them better. We can't take it for granted is what we are producing is relevant anymore. What we are servicing is what they want. We need to be able to anchor our products and core based on the consumer needs and what problem you're trying to solve for them. So getting those value proposition right is something very important. The next thing is that you think that places like hospitals, you had a total disruption in terms of the pattern of why they came into a hospital. So elective surgeries seem to be delayed. The fear of coming into a hospital seems to be delayed. So we need to make sure that we understand that, but how do we still take care of patients while they are necessarily not too keen on coming into a physical hospital. So each business has its own challenges. Now, if you look at our education brand in terms of Atlas, we found schools were nearly almost closed. Yeah. But how do you make sure that in that point, how do we make the kids' lives better by making learning fun? How do we bring that education to the home? So we've seen a huge change in trends, yeah. And I guess the challenge we have and the business leaders have, which I put back to them, is how do we understand this change and how do we take this change and make it relevant for you. Yeah, yeah. So change is a constant, yeah, and yeah. I guess when you're large and a corporate, understanding that and making sure that it's up to us to change and understand and not for the consumer to change according to what we are giving is a bit of a tough thing. But the good thing is we've kind of understood that, and we've all at different points, but it's going to be challenging. The biggest challenge I see this year is the strain on the rupee, especially us being in healthcare. And everything in Sri Lanka, majority is imported, whether it's a manufacturing side of it, even if it's equipment for a hospital, even if it's the necessary pharmaceuticals. And that needs some solution. The solution is not that you operate without a pricing mechanism. The solution is to address it and see how you could help the companies to operate sustainability, help suppliers to supply to Sri Lanka, but still make it accessible without making patients suffer. So there are different challenges, but you know what? When you have challenges, you have to find solutions. So I guess it's going to be a good, interesting year for all of us here.
What you just said, I think will be a lot of comfort to investors to know that Hemas is out there, they're proactive, they're dynamic, you have understood what's happening around you and you're taking, I would say, proactive steps in that direction. So probably that's a lot of comfort to people who would invest in your company, Kasturi, and maybe a good opening for us to shift to capital markets.
Okay.
And Hemas was listed, if I remember right, somewhere in 2003, 18 years ago, and at that time, one of the most successful IPOs, if I remember, you had both a mix of a prospectus issue and offer for sale, and one of the largest and the most successful issues at the time. 18 years later, how would you see yourself as a group? Do you see yourself continuing to use capital markets for your growth?
So you're right, Rajeeva. So Hemas, being 70 years, was known as a family-owned company, and they went in diverse businesses, and in 2003 they decided they would benefit by coming into the capital market. And when we IPO'd, the objective was to raise capital to grow, but it was more importantly to transition into a more professional, governance-oriented, structured, where we are forced to create value. Sometimes when you're not forced to think about value creation, you don't do it because, so that helped us. And over time, you found it helped us in many ways. One is how to structure ourselves, how to be governed, and how governance helps us to manage businesses better, how it helps us to be more transparent. But most importantly, from Hemas' point of view, it moved from family-owned, from family-run to family-owned, and then from
separation of management and shareholders.
Yeah. And then they actually committed. I think it may be because of the listing as well, or whether it's a philosophy, it's a mixture of both. Committed in bringing professionals in, building successors in the system. And in 2013, you did see Stephen Enderby coming in as a professional CEO. And the entire family, except for Murtaza, moved out of executive roles. And as of today, as of yesterday, Murtaza also, every family member is now gone into a non-executive role. And Hemas today is a totally professionally run business.
I think it's an example, and in fact, Kasturi, tell you, we take Hemas as a case study when we talk to new companies for his team, because I think, as you described, the manner in which, I think it was a company philosophy to separate management from shareholders, and I think they did it in a very successful manner, which is of course emulated by, I think, more companies now.
Yeah, and I think that when you go public, to getting the right mixture of independent directors on the board and being willing to listen to them. And I must say, our independent directors helped us a lot to kind of carve how we are run, carve how we look at the businesses. So when I reflect back, we kind of looked at what are the competencies we need to grow. And because it was all about competencies, gender or any part of it, we were diverse, right? And I wouldn't have been sitting here if I was labeled as a man or a woman, but because it was looked at in who has the competencies to discharge its role. And if you look at our leadership, we moved to about 27% of our leadership are women over time, and over like the last 5 years. And that's not done with design, it was done purely because those are the best people to sit on those roles. So independent directors coming into the board, asking the right questions, making sure that we do the right thing for the company and the shareholders. And of course, I must say to the family members who sit on the board, it's a big thing for them to listen to people and take the advice. They could easily shrug it off. So it's two ways, and I guess I think even though I'm part of Hemas, I admire the journey and the amount we are corporatized, and we became professionals within the system. I guess it's it, and listing was a big part of it.
Of course, yeah. So focusing on shareholder value, what would be your message to any new investor in your company or investor, and how is the company really, what initiatives has your company and the group taken to increase shareholder wealth?
So I look at shareholder wealth in a metric of TSR, total shareholder return, and that would be the capstone of how value creation happens. And that would be benchmarked on profitable growth and profitable growth, which of course using your assets properly. And what we are kind of go back and look at is that they have 5 pillars I'm looking at in terms of shareholder value creation. How we unlock it is, first one is growing within your core. And what we mean by that is we are in already core businesses. We've rationalized our portfolio and we are in the businesses we call core. But in that, go back, see what your value proposition, in whether it's a product or service, what you stand for, whether it's in line with what the consumers need and what's the need you're going to do. Do that anchor check. Then make sure that when that is ticked off, unleash volume. So from your RTMs, you just go back and unleash and go for volume growth on your core. We also have the next one is that there's so much of new stuff you can do within that. And we're not looking at it because we have not looked at it more aggressively enough. So that is something new we're going to bring in. And everybody we will be structured in a way that we start looking at what new we can do within the core. And the third one is where we can invest for the future. So there'll be some investments we look at. That is on the value creation. We would be investing more into our regional markets to try and get the revenues of the dollar revenues coming in. The country needs it, and I think it's the right thing to do at this time. The fourth aspect is we need to unlock the group synergies. Even though we are a group, I mean, like any company, we struggle to unlock synergies and work with each other. In January, we did the first unlock, and that was where Morrison gave their own brands of the OTC brands to pharma to take into the channel. And we took a 40% unlock on revenue just overnight. And it was a big mindset change, but now that we have a pilot and people start believing, collaborating together, I feel there's a lot of value unlocked because we command the distribution channels in different ways. We are excellent in different channels. There is so much of value we can unlock for the group and even as a business maybe. So that's the fourth one. And the last, of course, I think we'll be left behind if we don't use digital to enable us. Yeah. That in the context, and I'm not looking at digital as a business, but digital to
means of enabler
yeah. From a consumer point of view, from going back into the efficiency point of view, understanding consumers better, and maybe in a healthcare, how do we knit it and give a consumer a digital solution? I'm not sure, but we need to put that on the table. If not, we are not going to make that priority. So I believe if you do those and do it for you're structured around simply ask the questions, are you unlocking value? What is the value you're creating the consumer and what's the value you're creating to the shareholder? And move forward. So this would be our theme, and the teams are excited and we'll be raring to go, I guess. We started this, I must say, from about September, and we started seeing some results, but there's a lot more we have to do. And so my theory to the teams are, look, we cannot burden the country. So we took a call, no salary cuts to anybody. We took a call, no layoffs. And that was not easy, coming back from Easter Sunday and this. So if we are going to not burden the country, we can do better on our structuring. Not that we are efficiently structured, we have too many people. However, we can employ all of them only if we grow. So that's the challenge they've got. So it's up to them, all of us, to believe and grow.
Excellent. As you spoke about unlocking value, you spoke about wealth creation or shareholder wealth. I think capital markets is all about unlocking value and shareholder wealth creation. I think I'm sure Hemas has done that very successfully. Kasturi, one final question before I let you go. You have been a trailblazer, getting to where you are. I'm not really talking just being from the perspective of a woman getting there, but as an individual. How has your journey been? Challenging, difficult, or just a breeze?
I don't think anybody's journey is just a breeze. So somebody had called me an accidental accountant. I think I'll call myself an accidental career woman. The journey has been rewarding at every point, and I'm not talking about my career, I'm talking about life itself. Yeah, everybody has challenges. I've had my fair share of challenges, but I guess because of the challenges and my exposure to sports and the fact that I have a philosophy of enjoy what you're doing and try to do well in what you're doing, whether it's sitting here today or whether it's the job or whether I'm going and doing my sports, I just want to do well and I want to enjoy it. So if you anchor it around that and you're not looking for a title and recognition, your recognition is only leaving a legacy behind. So that happens in team sports, right? If I am excellent and my teammate is not, there is not going to be team recognition. You're not going to win. I might be man of the match, but there is no point on that. So you come from that mindset, and I had to make choices, and all choices I made, I had to live with it, and I can't complain about it. And end of the day, for me, the biggest reward I have is while I've journeyed and I've been blessed with my kids. I've got two amazing sons, and I was able to be the mother I wanted to be for them, while navigating a career which I actually didn't really want. But then eventually now I love my career because it's my home. And I was lucky. I got into an organization which managed to adjust to my personality. They became gender blind and they had a culture of family first. So you had the license to be a woman and excel, because for me family was important and my two kids were the world to me, and that was okay. So I guess when your people around are supporting and it's like a soil which is fertile, if you're having the willpower to succeed, you would. And if your cause and what you're striving is bigger than yourself, it's for somebody else, I think you'll be happy. So for me, that's it. And yeah, I have a title, but still for me, it's so my next thing is I just want to leave a legacy for Hemas. This company has been good to me, and my kids are there because of the company. And it's up to us to give back. And if I'm in a position I can do that and transform it, I'll do that.
Good to hear. Thanks, and thank you for joining us today on Stock Pulse, Kasturi.
Thanks, Rajeeva.